Let's talk about today, is trading really all that difficult or hard? In honesty, it's all in what you put into it, okay? And how much time that you spent within the markets. Like, how much have you actually educated yourself on? And you guys know that I stress the concept, the idea of market structure so heavily in the videos because to me, I mean, it is like the holy grail to be able to understand for one, which way to trade. If you're taking high probability setups, yes or no, either to the downside or to the upside, surrounding supply and demand. Because if you do not know how to read the markets, you are going to struggle. Simple as that. Trading is not all about just looking for, go green light, red light, taking breakout setups, things of that nature. You have to be patient and wait for the right opportunities and setups to unfold. Why would you trade or go short when the market is telling you, even on higher base charts, that it is trying to go higher? So if you are struggling to be able to define, all right, which way the market is actually trending, I would like for you right now down in the comment section, just comment yes or drop ones, all right? Just simply put a one down in the comment section, okay? Because I know that this is something that people are struggling with on a daily. But if they simply spend time, all right, I'm not talking about a week, 2 weeks, 3 weeks, and everybody's learning curve is going to be different. If you can master the idea of market structure, you are going to master the idea of or not overcomplicate trading, okay? So in that way, it's not going to be as hard for you, all right? And understand that. And the concept is going to be easier and easier. Now, strategies are what they are, okay? You may find some that may be overcomplicated, and then some that are a lot easier. So I'm here on this channel to really stress how I trade, my own personal experience, not forcing anything on anyone. It's up to you to either listen or not, all right? The biggest problem I see in just about all beginner traders is that they're jumping from one ship to the next ship to the next ship, and then they're trying to cross compare and see if this strategy is going to work. If it doesn't work within a week or two, they jump ship and go somewhere else. I understand that you want to kind of weed or cut the weeds real quick. You want to kind of separate yourself if something's not working out. But the question is, do you understand the strategy for one? And the question is, do you understand structure, being able to read? Every trade is not going to work out. And I have talked about on this channel so much information, I'm giving away so much information for free. I just did a video yesterday or day before, and I've done it many times over because people always question or have concerns about, I take it on drawdown, I didn't get the right setup. Is this a high probability setup? If it's not, what should I be looking for? You got to spend time on the charts. You got to, number one, I've said this and I said it today in our Discord, watch the videos. No more will I be sitting here answering the same question over and over and over, even if we have newbies coming to the channel, okay? Because it's all in the video content. If somebody's creating a series of information, videos, outlines for you to be able to break down, just spend time doing that. People just want to go straight to the top, get their the questions answered, and then move on. I'm not doing that no more. Watch the videos, okay? The videos are there for a reason. I'm going to say that right now. So if your questions are coming and I'm not, say for one, exactly or immediately answering them, 9 times out of 10, I'm not going to answer because spend time watching the videos. There's a reason why I drop so much content and purposely, okay? It's because I want to help individuals, and I'm not going to reiterate myself a million times over when I've already done so. Your questions can be answered within the video content, all right? But moving on, what I want to talk about today is simply, I know I went on for a little rant there, so please forgive me, is just a simple idea or concept when it comes to trading, all surrounding supply and demand. Yes, not every supply or demand zone is going to actually hold, but the key to it again is understanding structure. I want to show you here on my higher base chart because the strategy and how I trade is very simple. Mark up a higher base zone off of a higher base chart, whatever your higher base chart that you're used to trading with that allows you or you use to give you the bias in the market. For me, I'm using range charts, so the 120 range chart is suitable for me. And then I just move down to my lower base chart to look for my execution point to where I'm getting confirmation on rejection, okay? So what I see, just like looking at yesterday and today, is that, okay, we were chopping to the upside here, making higher highs and higher lows, all right? Kind of looking like we're moving sideways, right? And then into the close of yesterday, into the overnight session, we did what? Well, first of all, yesterday, we broke this area structure above. Okay, you see? As we push higher right here. But then we push lower here, all right? And yes, we took out some area of minor structure back to the downside, okay? Nothing major. There's a low right here. We haven't taken out these lows resting right here. So we haven't taken out any major structure, okay? So then the market starts pushing back hard into the overnight session, London session, okay? Which I don't primarily trade, but there are great opportunities. Again, for those that can't quite trade the U.S. or the New York session, London is a great session because outside of the U.S. or New York session, it is the session where there's volume at for the indices, okay? The market pushes higher and breaks structure above this area. So if you look at yesterday, we made this high here. We broke the prior session, not say high, but we broke an area of structure here. Then last night, when it came into the London session, it made this low, and then it broke structure higher right here, breaking right here around, I guess, 10 o'clock today, okay? Then the market does what? It starts moving to the downside. So now we're chopping sideways. But if you look to see what played out here, when the market broke structure here, it left behind a demand area, aggressive buying here, pulls back, demand area, aggressive buying there, pushes higher, demand area right here. So we have multiple areas of demand that aided, okay, in the structural break to the upside. All right, you see that? Now, here's the thing. Which one do we actually choose? Well, I'm going to identify the most recent one where there is a gap resting back at the zone. I'm still doing all this on my higher base chart. There's a gap resting back at the zone here. This is an untapped, unmitigated zone that hasn't been tested yet, where there was aggressive buying to the upside that aided in this area structure. So I'll wait for it to come back there. I got it marked. I have this one marked as well, because what I want to see is if we get reaction or rejection at this area, then I'm going to look to go long. And as you can see, it did reject the area. So then we just simply will go down to the lower base chart and look for an entry point. What does the entry point consist of? If I can find a zone, a demand zone within this 120 range zone right here, zone inside the zone. I'm not going to say this a million times over. I've said this. I've already said it. And people still ask the question, please pay attention to the video content. It pulls back, key area of demand right here on the 120 range chart. Then I'm just going down to my lower base chart, okay? Maybe people get complicated or overcomplicated things because maybe they're not using range charts. They're trying to trade time-based, volume tick, whatever it is, that is your poison of choice. You're not going to always see, where a range chart is going to mirror up or match up against a 5-minute chart or a time-based chart or whatever it may be. And I'm not saying these are comparable because they're not. They're not comparable to one or the other because time-based charts are calculated differently than range-based charts. So you're not going to find them to where they're going to match up, okay? But what you will find is that there will be opportunities on tick charts that may not be on time-based charts, and on time-based charts that may not be on tick charts. So you have to pick and choose which type of charts you want to trade. So when the market broke structure right here to the upside and pulled back, there's a key area of demand on my higher base 120 range chart. Now I moved down, scale down to my 24 range chart. This is the chart in which I'm going to take the trade off of, okay? But I've got to identify a demand zone in this larger box, which is that 120 range demand zone I marked up. Zone within a zone. Now, what I see on the pullback when it taps into the zone is that there is a high probability demand zone resting right here. Okay, so if I was to mark that off, which I will here, all right, mark it off right there, and then mark it off and be very okay. What I see here is that it tapped the zone actually right here on the 24 range. Inside the 120 is a 24R zone. Taps the zone there. Now, one thing it doesn't give me, which I need to see for confirmation, the rejection, is the break and close of a candle once it taps into the zone. It didn't do that. It gave a bullish candle here, but it dropped. It pushed lower. It didn't give me the break and close of the last down bearish candle. Then it did what? It closed outside of the zone. It's no longer valid, okay? All right? Closed outside of the zone, so I'm not interested. But even though it did, push higher here, that's fine, okay? The market's going to do what it wants to do. It could have been coming out here trying to bounce off the VWAP or some other level, whatever it may be, okay? But for me, this is not working out for me because it's not falling along with the strategy and how I actually trade. So I'm going to cancel that one. I'm going to X right through it. Okay, going to delete it. No longer interested in it. Now, I'm going to go back to the 120 range chart. So there is another zone resting below. Untap, unmitigated. There's a gap at the zone. All the same. They're all the same. Okay. What I just said. Gap, unmitigated, untap, all that. Okay. All right. So, and if you don't understand that, then please watch the videos because I covered that plenty of times as well. All right. So what I'm trying to say is that on the pullback, when it came here, it didn't give me the confirmation rejection to go along based upon the strategy. I'm looking for a beautiful demand zone in this case here to be able to go long. All right. Now I will say this: what you can actually do is, if you go back to that zone, is that maybe find in the zone with the market, I mean inside the 120, when the market broke structure to the upside on the 24 range, but it doesn't. I mean, this right here is not a structure break right here. I need to see a beautiful area where structure is being taken out. Okay. And again, structure is where it looks like this is how I look at it. If I'm moving to the upside, okay, it's like an A shape going to the upside. This is structure. When it comes back strong, breaks the point above, that's structure. All right. Not something like this here where it had one candle close to the downside and then one little small bullish candle. This is not structure. I need to see something where the market is pushing and then pulling back just as hard and then breaking that area. Okay. Hopefully you understand that. If we're moving to the downside, I need for it to look like this right here. Pushing strong to the downside, nice force, coming back, matching, and then giving that V shape and then breaking structure right here. So just understand that. So there was no structural break here on the 24 range back to the upside. All right, right here. So because of that, if there was, and we got a nice structural break on the 24 range, and then it came back to a newly formed demand zone on the 24 range, then I would be interested, but it all has to fall. I like to see it on the inside of the 120 range zone, the larger box. We didn't get that. Plus the zone here was invalid. It broke through it. I'm not interested. Now, I'm aware that there is a zone resting below right here. It taps that zone. Let's focus on this zone here at the bottom now. This one was no good, okay? All right, even though rejected there, it didn't play out as far as the strategy. It comes back down to the next zone below, okay? So next zone below, and let me say this right quick, because some people will kind of argue and say, well, it did tap into a zone. Yeah, it did come down, even though it made this zone here invalid and broke through it, this demand zone right here on the 24R. It pushed a little lower. You see that? How it closed below? And it taps this area right here. This demand area here on the 24R. This is low probability though. Can they work out? Yes, they can work out. All right. But if you look at the opportunities, I say opportunities, the times in which, I'll say like this, 9 times out of 10, 8 times out of 10, the lower the probability of a trade or the low probability setups are not going to work out as nicely. They will sometimes work out. But so again, you have to pick and decide how you want to trade. Do you even want to trade low probabilities or do you want to focus on the high probabilities? I'm focusing on high probability. This helps me eliminate and put into plan for myself, my trading plan, how I'm going to trade. I'm not going to be wishy-washy and take every trade. This is how I'm able to build success over time, is sticking to a plan that is centered around high probability, not low probability for me. All right, so on the 120 range chart, we marked this demand zone below it, okay? This is one right here, okay? When it comes back to that zone, I'm looking for, again, is there a demand zone on the 24 range chart that I'm on now inside that zone? Let's blow this up a little bit. Inside this larger box right here, right here. See that small area right there? Look, the market pushed up, pull back, demand to the upside. There's a gap, okay? Unmitigated. Not tested, right there. All right. This area right here that's high is this high right here, which is a swing within the larger swing. But this is an area of structure that's being broken. This is a minor area structure broken to the upside within this major area structure or this larger swing to the upside here. So it's definitely valid. So with that said, I'm going to go back to the 24 range. I'm going to mark that area up. Beautiful supply area. Not supply, demand area right there. Gonna be kind of tough because I got to carry it a long ways across. All right, so let's keep swinging to the left and to the right here. Kind of bring it across. I want you to see that it mirrors up and taps that zone there. Squeeze it back in. All right, we're good. Boom! It doesn't break through the zone, so now we have the 120 range zone and a 24R zone, both demand zones within, the small zone within the larger zone. At this point, all I'm doing is looking to see is, do we get a break and close of a candle to the upside? Yep. Break and close, bullish candle to the upside, closes, I'm long. Now it pulls back. Will that shake you out of the trade? You have to decide, okay? They're going to do this 9 times out of 10 because they know people's stops are resting right here. They can see where buyers have stepped into the market, okay? But if they're still interested in going long and knowing that they got to fill these gaps in, they have to fill these imbalances resting back in, they have orders resting on the table right here, guess what? All they're going to do is, especially on their way back down here, if they took out all this liquidity coming down, and this is an untapped, unmitigated zone here where there's an imbalance resting at, and they took out a fair amount of liquidity back to the downside, and they tap in, and you have confluence with a higher base zone and a lower base zone. The trade is there. It's all means of confluence for the setup right there. And then what does it do? Boom, blast to the upside. So once that market closed, the candle closed here at 929, at 19,000, I think that's 19,929. Yep, it goes all the way up to 20,032. Okay, that's a lot of points right there. A lot of points. Okay, and again, I'm only looking for the first 20 if I can get them, correct? And then maybe allow a last contract to run. I talked about that yesterday about, if you're the type of trader that trades 1-to-1s, or, allow it to hit your 1-to-1 and then leave a runner, or allow it to hit that 50% area of a 1-to-1, okay, that half point area, take most off there, and let the remaining portion hit your 1-to-1. There's so many different ways you can trade this stuff, okay? It's all about protecting your capital. So once you're in the profit, you can move up your stop loss to maybe, that 50-point area where you're looking for, not say 50 points, but if you're into taking a trade 1-to-1, move it up half of the 1-to-1 position, and then, take most off there, lock in, break even at that point there, and then allow it to run. Or you can, once it hits the 1-to-1, again, take out most of your position there, allow it to run there, and then move your stop accordingly going up each time it makes a lower high. A higher low going to the upside. You're just moving that stop loss. But this is a very simple trading concept that I want to share with you guys. And so just please stop overcomplicating the idea and making trading more difficult or harder than it really is. I know you're going to have to put time in. You're going to have to put skin in the game. But the biggest thing is you're going to have to understand how to restructure within the market. Understanding price action, okay? Understanding what zones make sense. And stop trying to take so many trades, okay? That's where you are able. If you listen to what I'm going to say next, right here. Eliminate taking so many trades. Limit the number of trades that you're actually taking. And you'll start to see your trading turn around. One trade, be done. Set your stop losses accordingly, okay? Lock yourself in the profit when you're into profit, all right? And stop letting the trades come back so far against you, especially if it's past the not break even, but it's past the stop loss area and you're still into the trade. You need to stop trading while you're ahead and figure out the pieces that you're actually or you're not doing correct. So I talk about this and break this strategy down of how I trade. Again, I'm not telling anyone to do it like me, okay? But if you're interested in seeing more trade breakdowns, where I'll walk you through actual trade setups that I've taken. I've got a slew of videos that I've created. And if you're a elite member, you already know. You have access to them. You guys have sent me DMs and messages saying, Mike, love the content. Thank you for the videos there. It helps. It's helped tremendously, okay? I can't even tell you the number of comments that I've gotten. And I appreciate you guys leaving comments because it lets me know that the material is helping you out, for one. If you're interested in becoming an elite member, the link is down in the description portion of the video. It's only $6.99 a month. That's all it is. $6.99. It's no course or anything like that. It's just where I am providing you additional content into a private community for those that are really serious about doing so and those that support my efforts as a content creator. I don't have to do this. I do this for a reason because I want to see people succeed. So for such a nominal, very inexpensive fee of only $6.99, it's through the YouTube tier membership platform. You just support my efforts as a content creator here on YouTube, but I'm giving you back these trade breakdown videos to where they break down the trade setups. I go in deep detail about the strategy for each trade in reference to profit targets, where to place your stop at, letting you know what I was thinking while I was in that trade. Just kind of giving you like you were sitting right next to me, telling you why and what I was looking at. That helped me. And the more you watch those videos, probably either faster, or depending on how fast you learn, you'll be able to pick up on things. Trust me. I mean, people they still send me messages every single day saying that the videos help out. Again, you get the trade breakdown videos, the video playlist, and a great video that I did covering market structure. So if you go down to the description portion of the video, you'll see a link that says become an elite member. It's right below the Discord link. Make sure when you click on that, 2 tiers will pop up. Make sure to choose the second tier for $6.99, and that's going to give you direct access to those trade breakdown videos, okay? For anyone that's interested, okay? That's up to you. Outside of that, if you're interested in joining the Discord, the link is there down in the description portion of the video as well. If you're a first-time viewer and you have not subbed yet, take the time. Go ahead. Click on the sub button right now while you have the opportunity and chance. And also make sure to turn your post notifications on so you never miss one of the uploads here in the channel. And if you found value in today's video content, please do me the biggest favor and drop a like on the, on the video today, okay? But if you're, again, if you're someone that's struggling with understanding market structure, drop a 1 down below, all right? What is it that you're actually struggling with, okay? Drop a comment down below, all right, in the comment section. That's it, guys. Take care. I'll see everyone in the next video. Remember, tomorrow is NFP. I'm pretty sure it is because it is the first Friday of the week. And so be very, very careful. I probably will not be doing any trading tomorrow because of tomorrow being NFP, okay? So anyways, take care. Hope you have a safe trading day for everyone that is trading tomorrow.